What is the primary function of the capital market? Here are your options. A. Providing short-term funds to companies. B. Facilitating long-term investment and capital formation. C. Regulating the stock market. Or D. Managing foreign exchange reserves. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Capital markets help in allocating funds efficiently by providing long-term investment opportunities and facilitating capital formation for economic growth. Which of the following is not a part of the Indian capital market? Here are your options. A. Primary market. B. Secondary market. C. Money market. Or D. Currency market. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. The currency market deals with foreign exchange, while the capital market comprises primary and secondary markets for securities. What is an initial public offer? IPO. Here are your options. A. A process where private companies sell shares to the public for the first time. B. The sale of government bonds in the market. C. A private placement of shares to institutional investors. Or D. The process of repurchasing shares from the public. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. An IPO is when a private company offers its shares to the public for the first time to raise capital. What differentiates the secondary market from the primary market? Here are your options. A. Securities in the secondary market are issued for the first time. B. Only government securities are traded in the secondary market. C. Securities are bought and sold among investors in the secondary market. Or D. Companies raise capital directly from investors in the secondary market. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. The secondary market facilitates trading of previously issued securities among investors without direct involvement of the issuer. What is the main function of SEBI in the capital market? Here are your options. A. Issuing government bonds. B. Regulating and protecting investor interests. C. Controlling monetary policy. Or D. Managing the foreign exchange reserves. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. SEBI is responsible for regulating the securities market, protecting investors, and ensuring market transparency. Which of the following is not an equity market product? Here are your options. A. Mutual funds. B. Warrants. C. Preference shares. Or D. Government bonds. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. Government bonds belong to the debt market, whereas the other options are equity-based financial instruments. What is a convertible debenture? Here are your options. A. A debt instrument that can be converted into equity shares. B. A short-term money market instrument. C. A fixed income security with no conversion rights. Or D. A government-issued security. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Convertible debentures allow the holder to convert them into equity shares at a specified time. Which regulatory body oversees the insurance sector in India? Here are your options. A. SEBI. B. RBI. C. IRDAI. Or D. PFRDA. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. The Insurance Regulatory and Development Authority of India, IRDAI, regulates and supervises the insurance sector. What are the two types of secondary markets? Here are your options. A. Equity and debt markets. B. Derivative and money markets. C. Capital and commodity markets. Or D. Over-the-counter OTC and exchange-traded market. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. The secondary market operates through OTC markets and exchange-traded markets for trading securities. Which entity provides depository services in India? Here are your options. A. SEBI, B. RBI, C. NSDL and CDSL, or D. IRDAI. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. NSDL, National Securities Depository Limited, and CDSL, Central Depository Services Limited, provide depository services for securities in electronic form. What is the primary characteristic of preference shares? Here are your options. A. They provide voting rights like equity shares. B. They offer fixed dividends and priority in capital repayment. C. They always convert into equity shares. Or D. They have no dividend payment obligations. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Preference shareholders receive fixed dividends and have priority in asset distribution over equity shareholders. Which of the following is not a category of investors? Here are your options. A. Retail investors. B. Institutional investors. C. High-frequency traders. Or D. Non-institutional investors. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Retail, institutional, and non-institutional investors are recognized categories, while high-frequency traders use automated trading strategies. What is the main difference between a bond and a debenture? Here are your options. A. Bonds are issued by private companies only. B. Bonds are typically issued by governments, while debentures are corporate debt instruments. C. Debentures are always secured. Or D. Debentures pay a fixed interest rate, while bonds do not. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Bonds are usually government securities, while debentures are corporate-issued debt instruments. What does the money market deal with? Here are your options. A. Long-term financial instruments. B. Derivative contracts. C. Trading of equity stocks. Or D. Short-term financial assets and liquidity management. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. The money market provides short-term funds and includes instruments like T-bills, commercial papers, and certificates of deposit. Who regulates pension funds in India? Here are your options. A. SEBI. B. IRDAI. C. PFRDA. Or D. RBI. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. PFRDA, Pension Fund Regulatory and Development Authority, regulates India's pension sector. Which of the following financial products represents fractional ownership in a company? Here are your options. A. Bonds. B. Equity shares. C. Mutual funds. Or D. Fixed deposits. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Equity shares represent ownership in a company and entitle shareholders to profits and voting rights. What are Treasury bills, T-bills? Here are your options. A. Long-term debt instruments issued by the government. B. Equity instruments issued by companies. C. Short-term securities issued by the government for raising funds. Or D. Bonds with maturity over 10 years. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. T-bills are short-term government securities issued to raise funds for fiscal requirements. What is the purpose of the Competition Commission of India, CCI? Here are your options. A. To regulate securities markets. B. To prevent anti-competitive practices in the market. C. To control monetary policy. Or D. To oversee foreign investments. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. CCI ensures fair competition by preventing monopolies and anti-competitive practices. Which is the largest segment of the Indian debt market? Here are your options. A. Government securities, GSEC. B. Corporate bonds. C. Municipal bonds. Or D. Commercial papers. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Government securities, GSEC, form the largest segment of India's debt market, attracting institutional investors. What is the main advantage of exchange-traded funds, ETFs? Here are your options. A. They provide guaranteed returns. B. They allow real-time trading like stocks while offering diversification. C. They only invest in government bonds. Or D. They are less liquid than mutual funds. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. ETFs combine the benefits of stocks, real-time trading, and mutual funds, diversification.